Hey guys, what's up? Tank Sauce here. So, in this video, I'm going to go over with you guys how the candlestick chart works in your trading. So that way, anybody who has never looked at a candlestick chart, never looked at a stock chart, has no idea what it means when you're looking at it. At the end of this video, which should be roughly about 15 minutes, you guys should have a better idea of what it is exactly you're looking at other than just, you know, lines or candlesticks moving up and down. So when you guys create your trading view account, you guys are going to get blank charts that look like this with green candles, which represent price moving upwards. And you're going to have it from red candles that represent price moving downwards. I'm going to change my chart because all my drawing tools are set for a different layout, which you guys are going to be able to do after you get your accounts. And I'm going to show you how, in another video, a trading view tutorial video, how to edit and make your chart however you want. So the green on my chart represents price moving upwards, and the red on the chart, or the purple on the chart, represents price moving downwards. So first off, price moves on the chart from left, which is the past, to the right, which is all the way to the present. So when you're looking at a chart, the further to the left you are, the further back in the past time is, right? And the closer up here to the right, to the most recent candle, is the closest, most present time, right? And price. Um, on the bottom of the chart here, you guys can see this is going to be where you see your time. These are split into days here. Spread it out a little bit. You guys have it, and you can see the different times. And let's do this so that way it's a little easier real fast. Switch it to 12 hours. Okay. So yeah, down here you guys are going to see the time of day that we're in. My chart is set to use TC5, which is Eastern Time, New York, and then you could do that right here. I am in the West Coast, but the market runs on East Coast, so I calibrate my chart to fit the East Coast, and that's the time that we're going to be speaking in on this. So yeah, price moves from left to right. This is the past over here, and this is the present over here. This is the time axis down here, and then this is the price right here, the price that the current market is at right here. This is the NASDAQ chart, which is NQ. You guys can see it right here is what we refer to it as. And this is a 1 hour time frame chart, which means that each one of these candles represents 1 hour in time. And on your guys' chart, you want to make sure you understand what time it's on because they're going to all move very differently, right? So this is the hour. Each candle represents 1 hour. You can go to a 4 hour where each candle represents a 4 hour. And you can see, right, the last 12 hours here, all you guys see is that price kind of stayed right here. It moved down a little bit and then it shot up. But if you move to the hour chart, you can see it went down, and then up. And if you guys move to the 15-minute chart, right, you can see that price did a lot more things. Kind of down, we just moved sideways right here, dipped down real fast, came back up, down, up, down, up, down, up. So it's important when you guys are looking at the charts that you understand what time frame you're on. That way you understand more in depth what the market's doing, right? Um, right here, you guys see this little ETH. The market runs on electronic, well, futures market is open 23 hours a day, right? Which is electronic trading hours. The stock market, which is regular trading hours, does not run on 23 hours a day. The regular hours run from 9:30 a.m. Eastern all the way up until 4:15 Eastern every day, and then it's closed until the next day, where it opens again at 9:30. But in futures, we trade electronic trading hours. So we get 23 hours a day that the market is open from, which means, and I'll show you this by switching to a day chart. Each one of these candles represents a day. So each one of these candles represents 23 hours in the market, right? So let's do highlight. We'll highlight 2 days. So each of these represents 23 hours, right? 6 p.m. Wednesday, we open, and we go all the way until we close right here Thursday at 5 p.m. That's a full 23-hour trading day. And the market's closed every day from 5 p.m. Eastern, and it opens back up at 6 p.m. Eastern, right? And the market runs from Sunday, we open up at 6 p.m. Eastern, and it's open Monday until 5 p.m. Eastern, right? And then we keep opening back up at 6 p.m. and then close at 5 p.m., et cetera, et cetera. And it's open from Sunday to Friday. Friday it closes at 5, and the market doesn't open up again until Sunday at 6. So that's the time schedule we move on. There's going to be a PDF on this for you guys in the group, so you guys can have that PDF at all times. Hopefully you're taking some little notes on this, but that's how the futures market runs, and that's what the time that we use generally. There are going to be reasons that you guys are going to use regular trading hours, so which we'll get into later on. But for the most part, you guys are going to be focused on electronic trading hours. Um, each of these candlesticks means something different. So before I get into this next part, again, these purple candles represent my down close candles, my bearish candles, right? Or candles that are moving downwards. The green candles represent the bullish candles or the up close candles or the candles that are moving upwards. So I'm going to dive into the formation of these candles so you guys have an understanding of how it works, right? What it means. Because what does this mean? I mean, you know it's going up here, right? But like, what does it mean exactly, right? Okay. So first we have the bullish candle. And we're going to add one more. This is what they look like. Do that. Okay. We have a bullish candle. And we have a bearish candle. Let's make this red. So we have the bullish candle and we have the bearish candle. So what does this mean when you guys are looking at this besides, right, that this is moving up and this is moving down? So on the bullish candles, a way you could refer to this as is the open, the low, the high, the close, right? That's another way to say that you're in a bullish candle, the open, low, the high, the close. And for bullish candles or up close candles, this is the opening price right here, right? This is the opening price at the beginning of the candlestick body. These bigger areas are called the bodies. So the green area is the body here, the red area is the body here, and these lines are called wicks. We refer to them as wicks, right? So this area down here is where bullish candles open at, and we refer to this as the actual open. This at the low point of the wick is the lowest point at which price got to during this candle, and we refer to that as the low. Up here it's the opposite. This is going to be called the high because this is the highest point at which price reached in this candle. And then if we have an open, we got to have a close. So right here on the body is going to be where price closed for this candle. So what does that mean? If we're on a 15-minute time frame right here, right? Each of these candles represents 15 minutes. That means for candles that are going upwards, we're going to open up here at the lower portion of the body. And let's just do this so you guys know. This is the body. Okay. And these are the wicks. You guys can screenshot this or save it. That way you always have it handy. Okay. So price on this candle opens up down here at the low of the body, right? It moves down, it creates the low, then it comes back up and moves all the way up here, creates the high, and then price comes down. At the end of the 15 minutes, it creates the close. So on a bearish candle or down close candle, the open is going to be at the top of the body, right? The high is going to be the next thing that forms generally, because we're going to open here. We're going to move up a little bit first to create that wick. Then we're going to move down. The low would come after the high. And the very last part of the candle that gets formed is the close, which is going to be the low part of the body on a down close or a bearish candle or a red candle. So this is going to be the beginning, the high, the low, and this is going to be the end. These are the bodies, these are the wicks. So no matter what time frame you're in and how much time falls between each candle, right? This is going to be the same formation no matter what. So say we're on a daily time frame, for example. Each one of these green candles, the lower portion of the body is where the day started. This is where the day opened up, right? This is the lowest point we reached in that whole day or that whole 23 hours. The top of the wick is the highest, and then the body right here is where we closed. It's the same situation for each one of these candles. And on the opposite, for these down close candles, the top of the body is where price opened for that day. This is the highest point at which we got to in this day. This is the lowest price at which we got to in that whole day. And this is where the day closed before we started a new day, right? So we opened here at 6 p.m. Eastern time. We came up here a little bit, we came down, and then we closed right here at 5 p.m. Eastern time, right? So that's how it works. And it's the same thing for all the candles. So, and it's important to know what you're on because, like I said, these candles are going to have a lot of different things going on inside of them on the lower time frames. So, for example, this is a 4-hour time frame. So each one of these candles represents 4 hours. So if you look at it on the 4-hour, you just see price moving upwards, right? But if you look at it, say, on the 5-minute, you could see a little bit more of a picture of what happened, right? So price came up, came down a little, up, down, up, down, up, down, and then it finished all the way up, came down a little bit here. So, and to show you guys how it works, if this represents 4 hours, this is where that 4-hour candle opened, right? This is where the 4-hour low formed. This is where the 4-hour high formed. And then this is where the close of the 4-hour formed, right? So in those candles, a lot can go on, as you just saw, depending on what time frame you're in, right? So, and the candles don't always move per se perfect. It doesn't always go on a green or an up close candle. It doesn't open, right? Low, high, close, right? It doesn't do that all the time. Sometimes it's going to go open, up, down, up, down, up, down, up, down, and close over here. Sometimes it looks like that, right? There's different things that could go on a lower time frame inside of those big candles. And the same thing is, it's the same thing for these down close or the bearish candles. You know, we're not just going to open all the time, make the high, make the low, and then close. It's awesome when it does do that, but a lot of times you guys are going to get an open. It's going to come down, down, maybe then up, then down, back up, and over here, right? You can see it doesn't move perfectly in those ways. That is it. You guys can see another part of the chart. Pay attention to this area right here, right? If you hold your mouse, instead of having to get in there and figure out what it is exactly by looking over here, if you just hover over that candle, get the line over it, up at the top, the O is the open. It tells you the opening price. The H is the high, tells you the highest point that time that the candle reached during this time. The L is the lowest, and then we have the close, right? So if you hover over each one of those candles, you're going to get those numbers for each single one if you're trying to figure it out. that's pretty much it for the candlestick chart, how it works, how the candles form, etc. And as we get more in depth of this, so we're going to show you guys as time goes on, we're going to show you guys more what different candles mean. You know, like if you see a candle with a teeny tiny body and giant wicks, what does that mean, right? If you guys see a candle here with a giant wick on the bottom and then a little green body and then a little wick on top, what does that mean, right? So there's different ways these candles can form that are going to tell you a different story of what's going on and how to read price differently and more effectively, which we're going to get into the next in the next video. We're going to go over some basic trading knowledge and analysis, which we're going to go over like ranges, trend lines, zones, levels, some of the correlated assets, assets, and a little bit of risk management as well. So hopefully this video was helpful for you guys and you got a little bit more insight on how the market works, how the candlesticks work. And if you guys have never watched or never looked at a candlestick chart before, you should at least be able to look at one now and kind of have a little idea of what's going on, right? And in one of the other videos coming up as well, I'm going to be showing you guys a trading view tutorial. That'll be one of the last videos that you could get into, that we get into, um, so you guys can see what's happening. And yeah, that is it. We'll see you guys in the next video.